now with railway, there was a couple of announcements about the freight corridors, also a conversion of about 40,000 odd standard wagons into Vande Bharat wagons. Now, on the whole, you're not seeing much of action in railway stocks today in general, and that's been the case with most other capital goods companies as well, despite the fact that there's a modest increase. It might not have been as high as what the market was expecting. So what do you read into this, that the market not really reacting to this announcement?
So it's just like, instead of buying a new home, I'm doing an interior change, and that's not a big capex, and that's the reason we haven't seen whether it's capital goods or railway stocks reacting to that. And at the same time, there's no expenditure number attached to it, and I feel that's the reason we are not seeing much of reaction. And over a period of time, we have seen, Santosh, that railway stocks actually react a month prior to budget, and during budget we don't see much of action. But I believe the announcement of railway corridors, that is something which we need to see, and I think there would be more concrete steps and measures which probably FM would announce in July budget. That's my takeaway on that sector.
Do you expect changes in the tax structure in the July budget, Siddarth?
I think that's anybody's call that there would be any changes, but the way ma'am spoke about that what she has done for corporate, Minister also mentioned that the rates are lowest, one of the lowest in the world. I don't think that they would do too much of tinkering, because to move from 5.1 to 4.5 by 25-26, to be very honest, the fiscal deficit achievement of 5.1 or 5.8 for this year is predominantly because of rise in tax collection, and any tinkering over there would lead to deficit number not being achieved. But again, it's something which maybe if just economics, then probably not, but if anything else, then it's anybody's guess. But I believe I'll go on the side that there may not be any changes in tax structure, at direct taxes at least.
Right.
Siddarth, one question here. Now, given that the rural sector that's still been struggling a bit, expectations were that there would be some SOPs there or some higher allocation of funds. That really hasn't come through. Does that come as a bit of a surprise, considering that it's also, general elections are just a couple of months away from now? Maybe the government should have done something there. Also from a FMCG perspective, where most of them, if you see the rural part, that's where they've really not been able to grow their numbers.
So I'll just give explanation in bit lengthy way. What we thought, we also thought on same lines that there might be some soaps for this space, but I believe politically this government is in very sound space in terms of their confidence of winning the election, and economically this government has done a fantastic job, be it through RBI inflation management. It was not just RBI, it is also some of the measures which government took, which FM clearly mentioned, proactive inflation management which they have done. So for next 3 months, if there are no announcement, doesn't mean that it may not come in July. I think all of us and ministry is also cognizant of the fact that rural economy needs some boost. So I think it's not end of the story. I strongly believe that in July we may see some or lot of things rolling towards this space. If I have to mention, if I have to come to the stock market point of view, then there are a lot of stocks, especially in FMCG space, auto space, where we have seen that stocks have not performed well because of rural economy not doing well. Santosh, if you remember, we were talking about few months back about IT, when the story of IT was not that good, but the valuation was very supportive, and we were very optimistic on IT despite strong headwinds. Same sort of story is building in FMCG space and some of the auto names as well, where we have seen that because of headwinds, stocks are trading at relatively cheaper valuations, and people are talking about the concerns. If I have to take few names, then HUL is one stock which has corrected substantially. Today it's available at 43-44 times 1 year forward earning, whereas stock has traded much above 55-60 times 1 year forward earning. This is a story where you can think of, or your investors can, viewers can think of putting in money. If I may stretch my answer a bit and talk about Maruti, that is also though it's not totally rural theme, but now we are seeing that Maruti is again one stock which is available at 7-year low PE multiple of 23-24 after today's run up. So if you see the numbers, volume numbers have not been very strong for Maruti, but because of premiumization, the margins for Maruti are increasing. So I believe, coming to the original question, that yes, it has been missed out, but you have to see it from two contexts. One is that there is no story for now, probably for next 3 months, but are valuations compelling? Yes. So there are few names which we can nibble into and accumulate, Maruti and HUL being among them.
We also know IT stocks. Has your view changed post the third quarter earnings? Would you be now more tilted towards mid-cap IT, or would you say that there's room for upside in large-cap IT, given the fact that Street believes that revenue-wise, the bottom may be in place?
Yeah, so as I was mentioning in my previous reply that we spoke about IT some 6 months back when market was not comfortable with that story, but valuations were compelling. As most of the IT management are talking about that, how the attrition level, high attrition level are behind them, front page news that how companies are downsizing now. I think this would only increase margins from here on. If you listen to Fed, then they also mentioned that they would still wait for inflation to subside, because and they are waiting. This pause is mainly because the growth numbers which are coming, the job data which is coming, is giving them confidence to hold on. So that augurs well for IT. Having said that, that doesn't mean that IT is pretty cheap right now. It was very cheap 6 months back. But does that mean that there's no headroom on the upside? Are they expensive? No, I think there's still some more room. But will that be a preferred space now for us? No, we are liking some of the auto space. We are liking some of the FMCG names. We are broadly bit cautious on market because some of the large cap retail names they have not given their earnings so well. So we are expecting some sort of slowdown kind of scenario going forward. But IT would outperform. So buy on dips I would suggest in IT, but I would stick to large caps, mid caps I would shy away.
Any thoughts on the cement sector that's been again seeing some fair bit of activity of late?
Well, I'm glad you asked me that. We are quite optimistic on cement space, but then stocks have run up substantially, especially Ultratech Cement, which has been the leader of the pack. So we maintain our bullish stance over there, but valuations are not very cheap. But that doesn't mean that you sell and you move into some other space. So maybe there might be some time stock might spend over here. Reason being, as FM also mentioned, that there's going to be unprecedented development in next 5 years, and we all are talking about capital goods space, but then a lot of infrastructure development is going to happen. Real estate, she mentioned about how it's going to be much more than what it is now. So cement space is going to be buzzing. One interesting thing which she mentioned after unprecedented growth, that the East India is going to contribute a lot in next 5 years. And in cement space, mid-cap space, there's a stock called Novoco Cement. It's quite cheap, and we believe that from current levels it offers good risk-adjusted returns. At EV to EBITDA front, it's trading around 7 to 8 times, which is pretty attractive compared to other frontline and other mid-cap names. So yeah, we are optimistic with orientation towards some of the mid-cap names.
Before we wrap this conversation, would you still be constructive on HDFC Bank? Of course, the numbers have been disappointing. Low liquidity coverage ratio that had come in as a big disappointment, margins under pressure. So would you say that the era of premium margins for HDFC Bank is a thing of the past, at least for some time?
HDFC Bank is such a vast thing to talk about, but then it's not that something is going wrong with this bank now. It's been like 2-3 years that some other issues have been happening. First, ban on issuing the credit cards and merger. Obviously, the regulation changes when NBFC merges with a bank, and that's the reason NPAs have shot up. We keep seeing on social media the service standards have been falling. some of the ex-management selling the stakes. So there are a lot of overheads or headwinds for HDFC Bank. But then ideally an investor should compare HDFC Bank with other options available in banking space. See, you cannot be bullish on India and not be bullish on banking space. So now if I see the valuation gap between ICICI Bank, Axis Bank and HDFC Bank, which previously used to be pretty high in terms of price to adjusted book value, in fact HDFC Bank is trading at discount to ICICI Bank now. I believe stock may not perform for a certain period of time, but looking at the valuation, looking at other things, I think the downside to HDFC Bank is limited and it should be part of your portfolio.
All right, that's the view then. Downside limited and it should be a part of your portfolio. With that, gentlemen.